today I will be your host for this Crypto Coins Coach and Huobi Research webinar discussion. CCC.io is the #1 crypto community since 2017. It's a community of traders, investors with more than 500,000 active members. It provides fintech, blockchain news and education, as well as features and hosting interviews with the best crypto projects. So today we are pleased to have an executive partner, Anthony Shen from Zonf Partners, Dave from Huobi Research, and Vitaly Tayin, entrepreneur and investor. So, guys, in the recent months, it's been quite a whirlwind of a journey in the markets globally due to the current global macroeconomic conditions. So, this includes inflation, geopolitical crises, rising interest rates, rising commodity prices and fuel prices. And all of this combined with the catastrophic events that we've seen in the crypto markets, such as the depegging of Luna UST. We've seen the crypto markets get propelled into what we know as a bear market, which is the dreaded term because of the fear that it has caused investors to sell. So although there's a lot of fear revolving around this market, many savvy investors believe it to be a bit of an opportunity for those that missed out on buying their favorite cryptocurrencies at discounted prices, particularly prices that have reached levels that are as low as the beginning of before the last bull run in 2020. So navigating these markets for investors can be tricky, to say the least. But that's why we have the experts here to give you their 2 cents on how to position yourself for success. So let's ask Anthony. Anthony, for investors out there trying to navigate the current situation, what would you say is the best strategy on deciding how and what to invest in given the current prices? And could you also give us a little bit about your investment rationale that takes place at Zonf Partners when deciding which project is worthwhile?
Yeah, I agree that compared to the last bull run, the current prices and value of some cryptocurrency have become very attractive to us. However, given the situations we met in the last bear cycle, that altcoins could actually potentially drop endlessly, right? The best strategy here, I believe, is still standing sideline, closely monitoring the entire capital market, waiting for Bitcoin to form a clear bottom, and then positioning in some valuable projects which have verified themselves in the last bull run. So when reviewing which kind of project is worthwhile for investing in the next bull cycle, I would consider the following aspects. First, if the team is responsible and fully engaged in their projects. So second, if the projects are continuously improved and their product is continuously updated. And third, if the resources and capital behind the project are highly supportive. And the last one, and very importantly, I think if the innovation is evolutionary and adopted well in the crypto. So what I'm saying above is existing projects which have proved themselves in the last bull run. On the other hand, looking back to the last bear bull cycle, we can see that crypto innovation is in very fast iteration, right? And the market focuses are shifted quickly. So in 2017 and 2018, we see Bitcoin alternative changing the Ethereum, right, around the crypto world. So what we also need to do is to be very sensitive, follow the new chain and trace the momentum. We have seen Bitcoin drop 56% in the second quarter of 2022, right? People are all discussing where the bottom is. To be honest, for a trader, it's still too early to tell and predict the bottom. But I expect after that, after the CPI topped out in maybe Q3, we could possibly see a good rebound in the entire market.
Yeah, no, thank you for that. So that's very true. I completely agree with you. So maybe let's move on to Dave. Can you shed some light for our users on some of the main catalysts that have caused this bear market in particular? I touched upon them slightly in the beginning of the video, but if you have anything to add on that, and sort of what are the right conditions for a bull run to take place, since we've had a lot of people, I'm sure, wondering when the next bull run is, and maybe we can think about the catalyst that could cause that.
Cool. But first, I think like Anthony spoke very well on the market situation, like the CPI and inflation stuff. Like some of the catalysts that drive down the market is like the CPI is so different from the market expectation. From the announced one, CPI topped at 58% higher than 8.54% previously, like 2 months ago. So another catalyst that is driving the whole entire market to go down is the liquidation of institutions. Like right now, there are firms like Celsius, which is this famous crypto lender, Three Arrows Capital, the kind of crypto hedge fund, the BlockFi, Genesis Trading, Nexo, BitMEX, Finblocks, Babel Finance, Orthogonal Trading, Maple Finance, according to Wall Street Journal, and the Voyager digital complex now are heading to up to like 2 trillion exposure of trading volume that is about to be liquidated. So having this risk that the market is having sort of like a downsides of the whole situation. So like I also want to provide some applicable solutions to play against these downsides catalysts, like investment advice though. During the market crash, the most simple method is to use like leverage futures at the same size to cover minus delta of the whole portfolio. So if you have $1 million of Bitcoin, you can do the net delta neutral of 5x leverage of $0.2 million of Bitcoin futures in short. If you're on the margin, like if you have $1 million in Bitcoin, you can send to cross margin account, borrow 50% of the collateral to hit up to like 50% of the debt ratio, which is 0.5 million of USDT or just USDC. Then use third of that, like 0.33 million of USDT to buy up to equivalent value of BTC3 short ETF to achieve a net delta neutral position. With the remaining of 0.16 million US dollars, you can swap to from like USDT to USDC pair, so you can short the USDT as a position to have the liquid USDC staking. So the leverage advantage of this trade is that you are borrowing other people's money for liquid staking with a steady APY to pay against any borrowing interest in your cross margin or isolated margin account. So with liquid staking, you can also unstake anytime. This unstaking effect and liquidity would save you from extreme market volatility to protect your whole portfolio. Like you can transfer to gross margin or isolated margin account to buy back spot so short position. So the final advantage of the portfolio balancing management is to reduce exposure to USDT where hedge funds are also doing the short positions. There you can achieve a net delta neutral position with a steady APY gains from liquid staking. So back to the question, like what's the catalyst to drive up bull market? Like right now, I think it's similar to the Lehman Brothers back in like 2008. So we have to see a total deleverage of the whole market, liquidation of a lot of institutions or individuals. So right now I can't see the catalyst, but I know that many ventures are investing mostly in Web3 and infrastructure of cryptocurrencies and blockchains. So maybe these factors are, sort of the catalyst of the next bull market.
Yeah, no, definitely. And I think if we see liquidations, then also there will be the last good project standing. So it'll be solid, fundamentally good projects that will be remaining. And also we'll see hopefully more crypto regulations and just a better infrastructure that can ensure the sustainability of DeFi in the future. So I completely agree with you. And so, yeah, brilliant. Let's move on to Vitaliy. We've seen many trends take place in the crypto market. And one of the ones I've always felt that is a big one is that we've always seen that Bitcoin is the main sort of confidence indicator in the market. So it seems like when Bitcoin goes up 10% or even 2%, altcoins either rally 20, 30, 50, all kinds of percentages. Whereas if we see a downturn in Bitcoin's price, we see altcoins crash even further. I suppose people have more confidence in Bitcoin. It's seen as a safe haven asset. So recently, Bitcoin has been hovering around $20,000, but it even dropped to around $17,800 before it bounced back up. So do you think Bitcoin could reach to higher or much lower levels? And how will this impact the altcoins? And is this important for people when it comes to deciding what to invest in?
Yeah, great question. Thanks. So by now, I think even the most optimistic casual investors, everybody agrees that we're in a downtrend. And that's not just crypto, that's all risk assets, right? If we take a look at Bitcoin, the institutional influx isn't here right now. Volatility is high. Momentum is pointing lower. So I personally would advise to majority of retail traders to tread carefully and definitely not be over leveraged. And also, it's very important for all the retail traders is that their trading funds should be, of course, at a reputable exchange that has been around for like a good period of time. Unfortunately, I think small exchanges, some of them will not survive. So you want to make sure to protect your downside there. Now, as far as like near-term trade, if you're looking to something like this month, particularly, again, this is no advice, but if you want to look at something near term, you can look at the high-low range get established in the beginning of this month. There is a possibility of a relief rally to maybe 25K. But again, I think average retail investors, they should stay put. Now, overall, right, it doesn't look to be good overall, like world economy, macro trends, things like that. There are some good things that we see for Bitcoin based on some indicators. Like if we take a look at the wallets with over 10,000, right now, Bitcoin is oversold more than ever before in history on a weekly time frame. MVRVZ score shows that we are far below realized value. Historically, buying Bitcoin during these periods gives pretty big returns. So based on these indicators, right, it's like buying BTC is a no-brainer. But like I said before, we're in a massive downtrend across all risk assets. So have to tread very, very carefully here. So, and even with the indicators showing that we're near bottom, there could still be another major move downward. And if there is another one, I look at the level of around 13,891. $13,891. The reason why is it was our yearly resistance in 2019, and it did not get broken until 2021. So we may revisit it again. Personally, at this level, I'll be looking to add as much to my position as possible. As far as altcoins, again, this is just a good time to see which projects have been built on solid fundamentals. So I would take a look at their funding. If you're able to see their treasury, I would look at seeing how it's managed and also how transparent and engaged the team is with the community. And by the way, if you are going to take a large position in a known altcoin this week, send me a DM. I should probably know you as you know something I don't. Personally, I would be very careful about adding anything to your positions right now.
Yeah, no, I completely agree with you. And I think it's important to know that a lot of people panic during these times when actually I've been telling people I'm actually really excited because these are prices I've not seen, and lots of people, my friends and family, missed out on some of these discounts when they were FOMOing in at the top. So I absolutely agree that right now is actually a great time. And if we do revisit that $13,891 level you mentioned, then I will be loading up. But again, everyone, this is not financial advice. We're just sharing opinions here. So thank you for that. Anthony, given your track record at Zonge Partners and the variety of funds you guys have on offer, I see you have an NFT art fund as well. So could you shed light on your thoughts on the future of NFTs and how you sort of decipher what a good NFT project looks like? And do you also believe that the NFT market value is correlated to the overall crypto market sentiment, or are there other forces at play here?
We believe NFT is clearly in its very early stage, and the potential is still largely untapped. So as far as the most widespread type of NFT, as we all see, is a profile picture, like the Azuki profile picture on my WeChat and on my a lot of like social media, right? And we have seen the social value of it with NFT showing as a profile picture on Twitter, Instagram, or WeChat. But NFT could also be applied on a lot of more things. So like traditional game, so VIP system, so asset proof, IP building, IP derivatives, and branding, artwork collection, etc. Right? And all those utilities actually are still being explored, and we're still finding more utilities, virtual world or also in the real world, right? So a good NFT project should try, I think, should try their best to continuously explore utilities and keep building their IP and brand. That means the roadmap is very important, and how they will do on the roadmap is also important, which means the execution is very important. But not only just a picture. Yeah, I see a lot of like shitty NFT projects are just like pictures, and they do not do anything after the public sales, right? And we can see actually Yuga Lab actually is a good forerunner as far. So I think they're doing good. Clearly, NFT market value is still correlated to the overall crypto market for sure, because we see clearly the very first group of NFT users or collectors is from crypto world, is crypto native. And most NFT is priced in volatile cryptocurrencies such as Ethereum and Solana, right? And in this bear market, we see NFT's fiat value, the USD value has dropped significantly with crypto, which has triggered actually fear sentiment in NFT NFT users. Actually, I see a lot of community in NFT who has played NFT a lot, but they are become silent right now. So, however, as NFT users keep growing up and more people out of crypto users are coming in, and I believe this correlation will become smaller and smaller gradually, but it takes some time.
Yeah, no, absolutely. I do agree with you about how NFTs are not, they are correlated with the overall crypto market sentiment. In fact, we've seen everything correlated. The crypto market is correlated to the tech market. Basically, anywhere that involves a lot of risk, investors, when they see negative sentiment or negative macroeconomic conditions, they tend to sell out. But one of the things I've noticed is the NFT sector is almost branching off as its own autonomous sector. Yes, it's absolutely linked to the crypto market, but the way I earlier mentioned Bitcoin, the changes in Bitcoin's price affecting the altcoins so drastically, I feel like what I've noticed is that we see Bitcoin's price or in a bull run go up, then we see the altcoins follow, like in a bit of a delayed manner. And then after the altcoins and Bitcoin calms down, I've seen a flow of funds tend to go into the NFT markets. It's almost like the third wave when we see the little Bitcoin spike, altcoin spike, and then we see a little NFT spike. But I think increasingly, which brings me on to my next question, but increasingly NFTs, everyone. I just had a bit of a technical glitch. Can you guys hear me?
Yep.
Brilliant. So as I was saying, Dave, can you tell us about how the future of this will look like in your opinion? Do you think the metaverse will be a revolution like the internet? And how long do you think it will take before we see long-term mass adoption?
I think the NFT world is so amazing that I think long-term mass adoption will be very revolutionary, and it will be very massive to adopt the big population to get in the virtual world. The famous metaverse projects like Decentraland Man and Sandbox with the native token Sand, based in Hong Kong. The play-to-earn economy also has a lot of spots ingredients like Steppen, where it's about move to earn or spots to earn. The play-to-earn economy also migrates to music and videos. Like Apple's, they provide loans to music artists to finance their work, Artists also have to pay off the loan providers as passive income to the loan providers, and meanwhile, the protocol also provides stake NFT, where music artists can generate passive yield to repay the loan. I think the time will take, these metaverse projects from, to like basic level or the level where we've seen nowadays to, like massive adoption. It's going to be like 2 to 5 years to adopt big masses, to join the play to earn economy.
Yeah, that's really interesting and it's exciting. I think it will be like its own real economies system. Everyone will have their own sort of community or metaverse that they will want to be a part of. So that's really exciting. It's exciting to see it in our lifetime becoming a reality. So, Vitali, as we know, compared to other industries, the DeFi space is still in its infancy. For example, banking sector is a mature industry, for example. So what shortcomings do you think the cryptocurrency industry has that it needs to fix when going forward in the future to ensure that it's sustainable and it's a sustainable use case for the masses? So, for example, does blockchain need to be bettered? What sort of things do you think the industry needs?
Yeah, DeFi is definitely in its infancy. If it was a baby, I would say it's going through its terrible twos right now. Right now, it's struggling, right, to capture in 1% of the traditional financial market share. There's a lot of work to be done. Like even before the recent events, transaction fees, right, Ethereum being sort of the mainstream blockchain for DeFi, so many people, for them paying $50, $200, $300 for transaction fee, that is crazy. That makes it inaccessible. But yeah, even besides that, there's more work that needs to be done. Like with the recent events, right? We've mentioned them early here in our panel. Many people have lost trust, and mainstream media has more ammunition to portray all of crypto in a very negative light, justifiably so. It is kind of a little bit unfair, right? Because I think we're all here and we know so many people in this industry, and there are so many incredible minds, passionate, dedicated people that work day and night to create companies of the future. So it is a little bit frustrating when some end up negatively affecting the rest, right? But at the same time, this is part of our story. It is part of our legacy. And it is going to take a good amount of time for people to become open again. And I personally never blame people. It's very easy to get addicted to high returns. It's human nature. So like when you take Anchor's 20% APY on stablecoin, it was not sustainable. And yet you had so many talking heads pushing it to retail traders. And the amount of confidence that they had while they did it is incredible. I mean, it's not good, but I mean, and they're not to blame too, because I mean, if you look at it, even people and funds who were well renowned and worshipped even, right? They have shown to be completely inept when it comes to risk management. And that's their full-time job, right? That is all they're supposed to do, is to be good at risk management. So the old expression of there's no such thing as free lunch, it proves itself true over and over again. The bill comes due eventually. So personally, like I have a lot of empathy due to recent events. We understand why we're all seeking more transparency and more consumer protection. Regulation has actually been welcomed by almost everyone for a good bit now. And we actually need that if we want to have real institutional inflow. Right now, they would be reluctant, right? But for obvious reasons. Whether you're an individual investor or an institution, when a bad guy comes to pull a rug from under you, you want to make sure there's someone to stop them or catch them and to punish them as well. And so in that regard, regulation is good. And but also we as people, right, we learn over time to not stand on the same rug over and over again. And that's where financial literacy comes in. We always have to continuously educate everyone within our reach, because even a lot of smart people, this is a completely new industry that they don't understand. So it will require like great communicators, right? And communicators that just can explain things in layman's terms, right? Because we can use fancy terms, but then like 99% of the people have no idea what it is. So I think over time, we will have more and more communicators that can just explain things to people clearly. And in summary, right, industry, people, everyone, we will all learn and evolve. And the next iteration of services will have no choice but to be better.
Yeah, no, absolutely. The thing is, I think people rush in with the lure that they're going to make a big profit. I mean, I remember during the peak of the bull run, people didn't even know what they were investing in. There were all kinds of meme coins and projects that maybe lacked serious fundamentals, and people didn't take the time to research and question what was happening. There was so much hype about some mainstream projects that turned out to be rug pulls in the end, and a lot of people were disappointed. But I think what I have always urged any of my subscribers or anyone on ccc.io, I've always said that people need to do their own research, really try and understand what that project is going out there to do. Look at it like they would look at even a stock. Like, how would they see the company? What are the company aiming to do? And then finally, I try to look at the sustainability of what that project or cryptocurrency or whatever it is trying to do for the long term. And that's the other thing. A lot of people have such a short time horizon when it comes to investing. They want to make 10x in like 2 days. And it's like, well, those, I have seen that happen, but the sustainability of those lasting at those price levels are, well, almost impossible, since the market is very speculative as it is in its infancy. So I've always said the best way to better manage your portfolio is to risk manage and to have a longer time horizon, like a 5 to 10 years, so that you can really see the entire industry develop. That project has time to develop and execute what it wants to. And also, when it comes to looking to investing for the long term, I've always said that the best way is to discipline your fears. So, for example, you mentioned how you can't blame anyone, and I agree. People learn from their mistakes. I myself have, when it comes to buying in at the wrong times and the right times. But I've always said that investing in cryptocurrencies requires a lot of emotional discipline. Like, your own personal gut feeling is that when everyone is talking about it, you tend to want to FOMO in, and a lot of people bought at market tops thinking it will just keep going up, which is unrealistic. But when people are really fearful and scared, so in this current situation, in a bear market, people don't want to buy or they're scared about it. When actually right now, the actual risk to buy it in terms of it, compared to buying in at the top is less. But again, that's not financial advice. So yeah, let's move on to the next question. So moving on to the next question, it seems like cryptocurrency. Yes, so as I was saying, so the next year, so it seems like cryptocurrencies, DeFi, metaverse, NFT industries, they seem to be here to stay. I'm really glad about that. So the next year will be crucial. So it's important that we sort of stay on top of the news, educate ourselves, and tune into ccc.io to help gain more of an understanding of what's happening in the markets. And that's why I wanted to say that it's really, really important to do your own research. And that's how ccc.io will be able to help you stay on top of the latest news and what will benefit you. So thank you guys all for joining us. Thank you everyone for your input. It was very useful, and I'm sure all our listeners will be very grateful for it.
Thank you. Thanks, everyone.
Thank you, everyone. Bye.
Thank you.
Thank you. Bye-bye. Thank you. Bye-bye.
Bye.